I think it's fascinating. And I think it's also important to think about a little notable detail that happened when Powell actually became the Fed governor, chairman. The very first thing he did on his first day was to entirely break with Fed protocol himself and make a video directly addressing the American public. No Fed chair has ever done that before. And that's very indicative because we have a chairman right now who is very much his own person, who is willing to be plain spoken. We know that from his recent press conferences, who is willing to kind of sell it as he sees it, and is also quite strongly independent in many ways. And having spent time with him over the years, I don't think he's going to take this lying down. He will not necessarily challenge the president directly, but I think that what the president has done has probably stiffened the spine of most of the senior Fed officials, that they are determined to be independent. And I suspect that Chairman Powell will actually go out and talk to the American public at some point if this pressure continues.
Directly. Interesting. What do you think it means for trade talks that are going on right now? And as Jens pointed out, a total departure from what is typical for the G7.
Well, it's certainly been very shocking, and what extraordinary timing that, of course, Steve Mnuchin, Treasury Secretary, is going to be meeting with his counterparts this weekend. I mean, the rest of the G7 is exasperated, shocked, still groping for what they can do in response to this extraordinary tirade and extraordinary turn of events. The one thing is clear is that the Europeans are not going to back down in any visible way quickly because they're worried about reactions from their own electorates. So I think we're going to see a continued fractious time at the G7. And the key question now really is, as we heard in the earlier part of the discussion on this program, you know, we've had trade wars, those have already started. We've got verbal currency wars now, although we don't yet have any evidence that the Chinese are actually intervening tangibly in this currency war. The question really is, are we going to see this turn into a capital war further down the road, where the Chinese may actually start saying, you know what, we hold a lot of your treasuries, we hold a lot of your debt. There's no reason why we need to keep holding that indefinitely. And if we start to see that kind of threat come through at the same time that the Fed is raising rates and the US is issuing more and more debt, we may be starting to slide into a very nasty situation and, if you like, a pretty hot summer.
Well, if the Chinese wanted to retaliate, Gillian, I mean, they might have to go that route. I mean, the president, what was so remarkable in that interview, Gillian, I thought, was that the president was perfectly willing to slap tariffs on all $500 billion of imports that the U.S. takes in from China, and the market barely nudges. And I'm just wondering, you know, in terms of the negotiation with China, there's nothing scheduled right now. They said we're not going to go back to the table unless China commits to fundamental change in their system. And yet there are all these threats. There's talk about a currency war. It sort of backs them into a corner, which I would imagine they don't like.
I'm sure that $500 billion number was chosen because it's a nice round number. Who knows whether it's actually going to happen or not. And one of the reasons why the markets are not overreacting yet to this tough talk or these tough tweets is because we do have a history of the president coming out with a strong statement and then rolling back. So many investors don't yet really know what to believe at the moment. And they're going to be seeing what actually comes out in the coming days in terms of whether this actually turns into action. But here's another very important issue to look at, which is, we've just written a story about this on the Financial Times on our website, which is capital expenditure, CapEx. Credit Suisse have just come out and forecast quite a large dip in CapEx next year on the back of various data that's already coming out. Now, remember, we had a big growth in CapEx earlier this year. That's helped to boost the economy on the back of economic and business optimism. But if we see this talk about trade carrying on, trade tariffs, trade disruption, where the place we'll really start to see impact is on the CapEx.
JeanClaude Juncker is coming for a meeting. Gillian, I followed JeanClaude Juncker a lot during the Greek financial crisis. What I thought about JeanClaude Juncker's influence during the Greek financial crisis is everything he told the Greeks turned out not to be true. Not that he was lying, but that he seemed to bring them down a primrose path, that he seemed to think he had a mandate that he didn't. Promised them this, it's going to be fine, and then it wasn't, and then there were the Germans. I mean, how much do we believe what he says today? Does he have any credibility, especially after what we saw recently when he was stumbling?
Well, does he have the credibility to eyeball the president and to actually cut some kind of deal? Almost certainly not, because European political structure is very, very fragmented. Does he have the charisma or the ability to go out and make bold tweets to actually capture the public imagination in Europe? Absolutely not. He's the very opposite of Donald Trump in terms of his personal style. So yes, we will see various diplomatic measures, but the reality is that Europe is very fragmented right now and does not know how to respond to the president with his comments on trade.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.